And we are live, Howard.
Welcome, everybody. Momentum Monday. Say hello to Ivan in San Diego. I am in Phoenix. It's 100 degrees here already, Ivan. What is it doing in San Diego?
It's good. You get to lose some weight, I guess. So.
It's terrible. It's May and it's 100 degrees. Not thrilled. All right, this is Momentum Monday. We're going to get right to the charts. And today, again, we're using IBD's MarketSmith charts, Ivan, I think.
Yep.
Okay, let's get right to the markets, and let's give a little synopsis. You know, we're looking for momentum. That's what this show is. We'll end with looking at places to avoid, but let's take a look at the Nasdaq it shows.
Yep. Can you see my screen? Right.
I can.
Okay, great. I mean, I think the main event last week was Apple earnings. I mean, the number itself was not anything spectacular, but the reaction was, especially after Apple announced another $100 billion of stock buyback, and then a couple of days later, Warren Buffett went to CNBC and said that he's buying more Apple. So that definitely changed the short-term market sentiment. And then we saw the Nasdaq 100 retaking its 50-day moving average, and so many.
So that's the key. Nasdaq took the 50. So now we got to go look at what stocks were leading through this correction, correct? And so let's now go. So the cue, as Ivan said, is you got the Nasdaq for whatever reasons. It just is. You know, we're back above the 50, relative strength rising. You can see that here in the IBD charts. And so now the stocks that you were scared to buy, and for me, some of those were Lulu, but the stocks that were leading in the last month are just going to jihad here. So let's go through some of them, Ivan.
Okay, let's go over some tech names. Can you hear me, Howard? Because I think I lost you for a second.
No, I'm here.
Okay. So you know, let's start with Shopify, for example. I mean, initially they gapped down on after their earnings, and they quickly recovered, which is again a huge sign that market sentiment has changed. Because you know, they say that in bull markets, bad news is swept under the rug, bad news count for nothing, and then good news are rewarded. So even a stock like Shopify managed to recover from its gap, which is really a good indication for me.
Yeah, I mean, I've been long this forever. I think what you see is it's just taking out weak. You know, the market's still under accumulation, and okay, so it's just taking out the weak hands, all these pullbacks, because you know the stocks are expensive. This is not we're 9 years. We can argue about how long this bull market's been going, but people are looking for reasons to sell, not reasons to buy. And you know, so like you said, I mean, you got to respect the price action. Okay, let's look at some new names. Because Shopify's just in a bull trend forever. Let's look at some fresh ideas that you see popping up.
Fresh ideas. I mean, the past couple of days, there were quite a few Chinese ADRs that are breaking out again after spending the last few weeks and months building new bases. And there is a recent IPO. Again, a Chinese ADR that I highlighted last week. It broke out today. This is a daily chart.
Beautiful small cap name. So China also goes to risk on. If people are willing to speculate, when there's enough good stuff going on in the United States and people are still willing to speculate in Chinese, that's just a risk on environment. And so that's a good sign right there. That's an interesting one for people who want to play kind of immature small caps because it's only been public 6-7 months, but that is a beautiful.
Don't forget that with the exception of Apple and then some other high-end luxury brands, the only way to participate in China growth is actually to own Chinese stocks.
Yeah.
And you know, companies like Baidu and Alibaba, they are pretty big conglomerates that have invested in so many Chinese startups.
Take a look at the Shopify of China. I haven't checked in on that in a while.
Absolutely, it broke out today. It looks very constructive on multiple time frames. I mean, apparently many people are waiting for it to clear 50.
Yep.
to enter, but it's, I mean, if you're a swing trader, today was an entry.
Yeah, today it looks like it's going to go much higher if the market, that looks like it could be a $75, $80 stock. Okay.
Yeah, and this is a weekly view. I
Beautiful.
mean, last week I also mentioned Baidu. I think it continues to look very constructive, and I would buy it here, I think, or with the stop under that consolidation. But the big pivot is 275. If it clears 275, I think we'll see some, major money.
Wow,
Coming in.
This just looks incredible. All these,
so many gigantic base, yeah.
So many big bases. Okay, look at ILMN, which is biotech / data / robots.
Oh, Illumina. Yeah, it's probably one of the biggest companies here in San Diego. Yeah.
Broke out to all-time highs today. If you have the risk profile for this, if I didn't own so many ideas, this is #1 on my list.
Definitely look at their earnings in the past few quarters. Like, they've been accelerating tremendously from 14%, 69, 127% growth.
I had a few shares myself for my daughter. I just think it's a great company. I've heard a lot of smart people over the years talking about it, and this breakout is in the face of biotech general weakness, other than the CRISPR stocks. Is this showing up in the SL50, Ivan?
No, it doesn't. It's not.
Interesting. I wonder why. Is there a number earnings?
There are quite a few other stocks that
okay,
are moving faster and looking stronger. So
it's a weird top of the list name. GWPH in the marijuana industry. Let's go through that. I own a few shares. Total spec, but I mean, you can see what 4-year breakout.
Beautiful earnings. Beautiful base, and they report tomorrow.
Oh, so they report tomorrow. So be careful. It's a new position. I own a few shares. I'm following some smart people in the space. At Stocktoberfest, that was a stock that was talked about. Again, I don't, the FDA, they just got like massive approval of the stuff they're doing. If you're looking for entries, the risk being it could gap up at earnings, but just be careful with earnings tomorrow. Okay, so that should be on people's lists. So you got weed, you have biotech, you have China. I mean, you couldn't talk about more risk on. You have what else on the very aggressive side looks good?
I mean, Netflix still looks good if you're looking to swing it. It's still looking good on a weekly and on a daily time frame. I think for me, it triggered on Friday. I think, let's see, there are quite a few software companies.
Like the ones that I haven't, OKTA and Enterprise.
That continue to look good. Which one else?
OKTA broke out more today. Okay. Now they're enterprise stock. And then if we go back and see one that we've been talking about forever, and I'll further explain why this one in hindsight was correct, Zendesk, ZEN. So again, let me walk people through this, because we were buying this stock in the high 20s on that initial breakout at the end of last year. And the reason customer support, this is the only way for people to own customer support. Amazon came out with his annual letter, Jeff Bezos saying the customer is everything. So, Amazon is the true customer support. It's not just an e-commerce, it's the customer connected software enterprise. If Amazon spun out their own Zendesk, and shared it with the world, they'd be Zendesk's biggest competitor. Obviously, they don't want to share their products. So again, this is going to be a space that's there's not enough pure plays in this space, which is why Zendesk, while expensive, continues to just climb up every day. And what's holding it back is just, it's an enterprise software stock. It can only get so big, but this space is going to have a lot of competitors coming into it. And in the meantime, Zendesk on dips continues to be a buy. Okay. Anything else, Ivan?
I mean, there are quite a few stocks that they're acting constructive.
Through the SL50. Let's go through your list.
Yeah, let's go through it real quick. I just need to change the screens.
Sure.
Okay. Okay, so this is the latest SO50.
Yeah, after we'll pull up, it's a stock that I've owned, PANW, the security play. So that is now 2 weeks on. It's like right under the $200 mark. All right, so you can see China. What else? We've got China software, Netflix still #1. QDEL is interesting. We finally got MMYT is up there on the list, which is our price line of India.
Yeah, it's been there for 5 weeks actually. Yeah, and it's looking amazing right away on a weekly or on a daily. With $40 is the pivot.
So you can see it's just the same stock. We're getting the names. There's just a wide berth of names that we have to choose from. I guess we should look at Twilio at the end. We'll look at Twilio. We'll look at PANW and MMYT. So you can see, and Noah's on the list. So you can see a lot of our work is just price is just bringing us all these ideas. But you can see a lot of new names, Ivan, huh?
Yeah, 10 new names this week, definitely, and some old
names again. Okay,
appeared. I mean, so UPLD. This one is very interesting. Also, a software name.
Which one?
UPLD. Upland software that broke out today. It's a new name on the list.
Can you go back and let's pull up a few more and we'll call it a day.
Okay, let me go back.
The basic thing is there's just risk is on in the most wildest places. Even crypto is a lot of the tokens are moving up 50-60%. So it's just risk on for whatever reason. Enjoy it while it lasts. But go ahead, pull up a couple of these other names.
All right, so let's go over a few of the SO50 names. The price line of India, Make My Trip, is breaking out. Let's pull a weekly time frame. I mean, definitely 40 looks like the level that will attract new momentum money to the name.
Yeah, it just doesn't have the earnings. Like again, so it's one that it's more of like I've called this a venture capital play still, even though it's just got a huge market cap. Is this, if they can finally build earnings, this will be what institutions really pile into on exposure to India.
Yeah, this is very surprising to me. I mean, with their sales growth and being in that high margin industry, is really surprising that their earnings are still so low. I mean, compare their numbers to the actual price line, which is Booking.com. Look at their numbers. I mean, they're earning like $87 per share, or they expected to earn $87 per share this year. They still continue to grow it.
No economy in India, nobody has money, so it's just an economic thing. So again, like MMYT is purely speculative, but I mean, I love it because it is the bookings.com of, and if somebody wants to go into India, it's an acquisition target. Okay, what were you had this other one, Uplands?
UPLD, it's a new name on the list.
Course Cloud Enterprise goes to the theme of corporate spending that we've been talking about. So I like this. It's a new name. I'm going to do a little work. Upland Software.
Yeah, it broke out today. Another one that is not on the list, but I think it's looking decent, is Eurogen Pharma, also with a very decent day today, with a breakout after a few days of tight range consolidation here above the 50-day.
Okay, URGN, got it. Okay.
Yes. What else?
Oh, we were going to look at PANW.
I'm sure it's on so many people's radar. I don't know if everyone owns it already, but definitely so many people are talking about it. It's looking amazing on a weekly time frame, and we talked about it so many times here on this show that if it clears the 200, 205, I think probably this one is going to 300. I think over time.
Yeah, for me, for all intents and purposes, the breakout above 160 was the all clear. But again, just because there were so many gaps on the way down, but yeah, the true all-time high is right above 200. Okay, but that is It's kind of the triple Lindy. It's security, it's software,
Yeah.
and it's in a high growth space. And the earnings are good. Like the earnings continue to grow.
Yeah, they're amazing. And in the same space, there is a new IPO that has been doing amazing. SailPoint. They try to break out again today, but finished near the low. So probably it's a little exhausted.
Yeah, and then in finance, in old school finance, well, the banks might have struggled. Silicon Valley Bank and Schwab continue to. I think it's SVB. Yeah.
Yeah, I mean, it's the strongest bank out there. It still puzzles many people how come a bank can trade at such high multiples, but looking at their growth, they deserve it.
Well, look at the earnings. Look at their earnings.
Yeah, and let's take a look at on a weekly time frame. I mean, you can see the growth is insane. 90% earnings growth last quarter. Sales growth continues at 30%. So it's.
I'm an idiot. I sold this way too early. But this is owning the Nasdaq. This is owning a bank with a Nasdaq warrant. Okay, Schwab too. Boring. And I don't think it's a stock to own up here. We were buying it much lower, but you can just see that the slight up in interest rates has really helped these stocks along with the bull market.
Yeah, definitely the increase in interest rates has been a big factor, and
well, the subtle increase. We're still at low levels. Okay, yeah. And then continues to act well. Our Chinese Schwab.
Tech stocks, Chinese stocks, and the occasional biotech continue to look amazing.
Oh, let's take a look at Twilio. It's another one on our list. Yeah. So you can see the crash post-IPO. That was basically the era of Uber, Lyft growth, and Facebook Messenger, and now Twilio's kind of survived this Uber. As one of my friends emailed me and said it was just more that decline was based on Uber trying to switch off Twilio. I think it's a combination of, like I said, these micro brands taking back control. All these small e-commerce brands are starting to use text and one-to-one communication to talk to their customers. Twilio's in a perfect spot to get back to all-time highs. So they report earnings in the next few days, but 97 relative strength here on IBD. Thousands and thousands of customers. So kind of like a Shopify. This is kind of an enterprise Shopify that helps everybody on Shopify theoretically, that has a brand get customers. So Twilio is a license to print money. The longer they go in business, the more customers they have. And the more that a business can talk directly to its customers using Twilio products, the happier they are with the service. This goes all towards the customer service. Amazon in a box. Twilio helps people be Amazon in a box, and Shopify. Okay, let's call it a night.
Sure. I mean, if you want to just to finish with a few words on Disney, I guess Disney versus Netflix.
Oh yeah. I've been talking about Disney. I've been wrong, not massively wrong. It's the poor man's Netflix. I think kind of like Twitter. They're kind of like the media version of Twitter, other than that they have earnings. Meaning they're a little behind the times. The management seems to not have the courage to go all in with the model that's obvious. For Twitter, it's financial markets, and for Disney, it's being a Disney Flicks and direct to the customer with a subscription business. So I think much like Twitter went up just because there's not much else they can do wrong. I think Disney's being penalized for being wimpy about the future, and I think any good news will see this stock go.
Yeah, makes sense, and I agree. Over the past few years, they made some major acquisitions, with the Star Trek characters and series, and then Marvel. So they're really thinking long term, and they're positioned incredibly well. Not for the next 5 years, but for the next 50 years. So I think if you want to own a stock for the really long term, this is one of the names.
Even media, but they still got to execute. But that relative, it's not gonna happen overnight. Now, on the other end of the big caps is Nike, all in with Nike, which is just continues to be on the verge of greatness again. Relative strength rising finally, and just been a lot of bad news baked into this stock. And I think with the Kanye controversy and Adidas, I think there's and Tiger's staying out of trouble and being back at golf this summer. I think there's a lot of good stuff, and I love Nike Wear and what they're doing. So I've been long this stock. It looks like on the verge of breaking out again.
Yep, I agree. And you can see last year when Nike struggled, it seems the market was expecting, a decline in earnings, which is kind of happening this year in 2018. But remember, the market is forward-looking, and now the stock is setting up to break out. While still earnings growth is low, but the market is expecting the next year things will turn around.
Well, the brand's getting better. Remember, there's GOAT and StockX, which we saw at Stocktoberfest. These are companies creating secondary markets for Nike products. It just helps the brand, and Nike knows marketing and how to deal with micro brands better than anybody and launch stuff. So I think it's a good era for Nike. I mean, it's still a big company, 100 billion, but put it in perspective, Apple's buyback is actually the size of all of Nike. So it puts you into scope how big and how small Nike. Nike is a huge company, but Apple just did a buyback bigger than the whole company. It's a 50-year-old company. So it puts you in perspective of the scale. I still think Nike can be a multi-$100 billion company, just market cap. So that's kind of, I see Nike, 20% downside, 100% upside. Obviously, I prefer to buy these 8 to 80 brands when they're down 20%. But again, this is on the verge of breaking out. So risk on. Things can change. We'll be back next week, but you can see all the money flowing into some risky assets. So,
yep.
All right.
I agree. All right. See you next time, Carl.
Cheers.